Imagine for a minute if you could replace your entire income with a passive income stream from a dividend ETF. That's exactly what we're going to be looking at today, guys. So, building a dividend empire, creating really an ETF portfolio that can provide you a steady stream of income that you can turn on when you get to retirement, making sure that everything is paid in full. This is going to allow you to essentially live a very free life without having to actively put in that 9 to 5 time to really earn it. Now, at the core, dividend payment is what companies give back to shareholders when they distribute profits. That is the way that dividends work, and investing in dividend ETFs or dividend stocks can give you a regular paycheck without ever having to sell the shares that you have. And of course, they treat it like a magical piggy bank that is just going to pay you and replenish yourself over a monthly, quarterly, annual, depending on when the dividends are paid. Now, of course, one of the biggest reasons why people struggle with this passive income idea, it is really the lack of knowledge. That is my personal experience that I see. Don't know where to start. They don't know how to research companies. They don't know what metrics to look for. They don't know what to invest on by not only a lack of fear, but also market volatility, where if something starts going down, all of a sudden they're all in. They're selling everything in the entirety. And of course, this is not the way to build wealth. This is very counterintuitive, but a lot of people also say that it's way, way too complicated to get in and earn that passive income. But truth be told, when you start looking at dividend ETFs, it's incredibly easy and very streamlined when we look at the SCHD, which is what we're going to be checking out today. Now, of course, another major obstacle that we see is a lot of people think that investing is super boring. You just go ahead, park your money in there, and you can do that. And honestly, that is really the best way to do it. When I start looking at the HD, when I start thinking of something like the VOO, which is the S&P 500, putting money in there, I don't want to manage it. I don't want to worry about it. I want to really make my regular contributions, really kind of set it and forget it, and not have to worry about it. Now, when you start rolling and really snowballing dividends in their entirety, and again, we're going to get to a point where dividend portfolios get to a certain dollar amount where we can flip the switch and start taking those dividends instead of reinvesting those dividends. Now, of course, when we start thinking about this, getting $100 a month, $200 a month, up to $3,000, $4,000 a month will replace your income in the entirety. So let's hop over, check out the HD, and I'll show you exactly what I'm talking about. All right, so here we're looking at the Schwab US Dividend Equity ETF. As you can see, the ticker symbol on this is SCHD. This is one of the absolute most popular dividend ETFs that we see. And I want to run through here. Now, one thing they did just announce after the effective market close on October 10th, there's going to be a 3-to-1 share split. So a lot of people are saying now is the time to get in, because if it's a 3-to-1 share split, we're going to get a lot more shares of the SCHD. If those shares increase in value, now we have 3x the shares. We have a lot more shares than we originally did, making this really, really lucrative if the ETF does increase, which honestly, looking at what's coming in the future, looking at, the Fed lowering rates, this is a great time to invest, even though we're seeing all-time highs, because the all-time highs could go even higher. Now, looking at the value, $83.47, so $83.47. Previous close, you can see it kind of went up a little bit. Now, in this, you really do have twofold. Number one, you can have an increase in the value that are actually within this portfolio with the companies themselves. Then when they go ahead and they pay those dividends, your dividends can get reinvested in here as well, which again, I want to get into. Now, when we start looking at the holdings, there are only 103 holdings, which of course, looking at this fund specifically, they're focused on those high paying dividend companies that we have in the United States. And of course, portfolio turnover, 29%, not too bad right there. Even look at the price and earning ratio, 17. Again, it's still pretty good with a very, very total expense ratio, 0.06, which is super low when you think of the expense ratio. Now, looking at the yields, this is where it gets pretty interesting. SEC yield on the 30-day, 3.6, distribution yield, 3.3. Now, overall, the performance of this has been doing very well. Which is, it looks like there's a Schwab little error up there. But when we start looking at this and thinking of the S&P 500, which yields about a 10%, you can see right here the SCHD market value. Year to date, we're at 13.8. So we are considerably lower than where we are with that VOO or with that S&P 500. But when you start looking at in the 1 year, even looking at the 10 years, or even since inception of this, 13.39%. So we are really well above over where we're seeing that VOO or the S&P 500 at roughly 10% a year since inception. 13.3 now. Now, this does rebalance every single year, making sure that the dividends that are offered in here really do and stay competitive. And again, when you look down here, even at 12% right there, but when you start looking at the NAV returns, again, the pre and post SEC pre-liquidation, you can see post-liquidation, the tax ratio, taxes, of course, when you start looking at the growth in here in paying taxes on the dividends that are earned, it is only where you're taking them out. And you can see the cumulative growth on a $10,000 investment. And this goes all the way back. You can see right here in 2014 and then going all the way to 2024, it's over 30,000. So when you think of that, even looking in the last 10 years, we have tripled what you're putting in here, which again is kind of crazy to think. Best 3-month return, 18.01%. And then, of course, we know that previous performance will not be indicative and is not indicative of what we do have for the future performance. When you start looking at the holdings, this is where it really does break it down. Home Depot, Verizon, BlackRock, Pfizer, Chevron, you got Texas Instrument, Coca-Cola. You have some of the absolute biggest dividend paying companies that we have in the United States that are sitting in this portfolio, allowing you to earn some dividends. So what does it look like when we start investing in this portfolio? Let's go ahead and take a look at that. And this is one of my favorite things to look at, the SCHD Dividend Snowball Calculator. So you'll notice here, even with a very modest investment, this is where it gets interesting to where you can see real money coming in. So in this scenario, I put in $200 that we're putting in every single month, and we put it on the course of 30 years. So if you think right now, let's say you're 35, you want to retire at 65, or even earlier, you're 25, you want to retire at 55, you have a 30-year window, and you want to replace your income in its entirety within that time frame. Putting in $200 a month and running the numbers, it gets super crazy when you start doing the snowballing and the compounding of interest. So we have the first couple years, and even looking there, right about year 7, you can see we're generating about $1,200 in annual dividends. That puts us at our $100 a month, which of course, when I start thinking of this mathematically, or really the assets, if I'm generating $100 a month, this of course is going to be, could cover a cell phone bill, could cover a bill that you have that runs about $100, could cover your internet bill. But overall, this is not the point that we want to get to, because when we start looking a little bit further, we add on, let's say, another 5 to 10 years. So going from, your 7 year to your 17 year, now you're generating about $11,000 a year. So annual dividends really starting to stock up. Now we know in the United States, it is on average about 62 to 64,000 that individuals are making a year. So look at this, by 25 years, as we can see right here, by your 25th year, you have fully in your entirety replaced your income. Again, if you started at 25, now you're 50 years, you're making $62,000 a year in an annual dividend. Now I know $200 a month over an extended amount of time is going to make a big difference. But this, of course, let's say you're only 50 at this point, you want to retire. Okay, you can pull out $62,000 a year, not even including if it goes up, if the value goes up. They're using some generic numbers that are kind of based on where the SCHD was. When you start looking at this and even thinking right there, you're at age 50, let's say you take it to 60, you take it out, another 5 years here, you're getting $200,000 a year by the age 30. So if you started at 25 and by the time that you hit 55, you could be pulling in $200,000 every single year. And of course, that is going to be dividends. Don't have to work anymore. Don't have to worry about anything because you're making 200 grand a year just from the dividend portfolio. Now, of course, if you want to really play around with this and really extrapolate what it could be, where if you're putting, let's say, $500 in this thing, it just goes parabolic. You can even see right here when you start getting right around 20 years. So you're putting $500 a month over the course of 20 years, boom, 64,000. So the average annual income that we have in the United States is made up in its entirety. Then when you start going a little bit further, again, thinking of you're getting $500,000 in dividends, this is a really big way that when you think of Warren Buffett, when you think of these big, these huge, billionaires, honestly, at this point, getting ready to see, and I don't know who is going to be the first trillionaire, but when you start looking at the amount that these snowball, it is just astronomical. I mean, even here, your portfolio is going from 2.8 to $3.4 million. You have a $600,000 increase year over year, which again is kind of crazy when you start factoring in what you could do with this money and what you could do with the portfolio. Even if you go down and let's say you just put $100 in there every single month, again, this is going to make a big difference because you could contribute $100 every single month. By the time you get ready to retire, you could be pulling $100K out of this every single year, meaning that you can fully replace your income depending what it is. And of course, if you're utilizing this to supplement Social Security, it's going to make a big difference, even just putting $100 in there, making sure the snowball. And of course, this is no initial investment. This is not putting anything in there. This is just putting that $100 in there every single month, which again, you could adjust some of your spending habits. You could put a little bit of money aside, but investing really early is the big difference. When it comes to really replacing your income in the entirety, dividend snowball calculators, very, very cool to see. Sorry guys, so that is going to do it for today's video. Let me know in the comments what you guys think. And as always, thank you guys for watching.